Functional capital markets are vital for the healthy growth of economies. Automation has transformed the way that public markets work, but private capital markets haven't kept pace. Many participants are still using processes created decades ago, but Globacap is on a mission to change this. I'm Rosanna Lockwood and I'm in Davos, where I sat down with Globacap's CEO. Miles Milston, CEO of Globacap. It's wonderful to have you here with us in beautiful Davos, Switzerland, where the sun is just peeking out from behind the clouds.
Thank you very much.
Let's just start by talking a bit about Switzerland, because you're based here. What did you think about coming to Davos to sort of spread your company message?
I jumped at the opportunity. Davos is a great place with coverage of the World Economic Forum every year, but more than that, Switzerland is absolutely the epitome of a free market economy that's efficient, that's forward-thinking, that's advanced, and has great snow coverage.
Let's talk about the markets and economy then, because that's really the business that you're in. And with Globacap, tell us exactly what you do at Globacap, where you're sort of fitting into the industry landscape.
Sure. Globacap is a financial technology company that's digitizing and automating private capital markets. We're essentially bringing public markets-like efficiency to private markets. So let's just take a step back and let's clarify what are public markets and private markets. Public markets are where there's an exchange that big companies have their securities traded on that any member of the public can come and buy and sell, such as NASDAQ, New York Stock Exchange, and so on. Compare that to private markets, where it's a private company, the securities of that company, the shares or the debt, they require the company's approval for any transactions to take place. And so it's really interesting because public markets are what everybody knows about and reads in the press. But actually, if you look at, for example, in the United States, there are 4,000 public companies compared to about 6 million private companies with employees. And so even though those public companies are bigger, private companies actually comprise the greater amount of employment in the economy and in the world. But all of these institutions that exist in public markets that allow for efficient transactions to take place, you just go to your broker, do a trade, it all gets settled, those don't exist in private markets. And so transactions in private markets between two investors is extremely laborious, extremely manual, and time-consuming, can often take weeks or months to settle. So what we've done is we have digitized and automated all of those processes in private markets, from issuing securities to administering them on a continuing basis to settling the secondary transactions between investors. This has now become point and click. We deliver this as a white label service to capital markets intermediaries and to institutions like securities firms so that they can deliver a private markets offering to their investor base, speeding up transaction flow, reducing costs, and improving private markets, liquidity, and transactions.
It is a very novel concept. I've been a business journalist for years, and I haven't heard of something so specific as this, but attacking such a large market. We'll get into the size of that market. But first, let's talk about why Globacap was developed. Can you talk a little bit about the genesis, the origin idea?
Globacap originated from a combination of myself, my co-founder, and wider team's previous experience in capital markets. As well as a mix of technology, deep technological experience, deep regulatory knowledge, and looking at it and seeing that technology has evolved and come to a point where so much of our wider economy, so much of our daily lives has become digital and automated, and we don't even think about it anymore. This is only a 10-year transition, but we don't even think about using our phone for literally everything. Yet, when it comes to private markets, which is such a huge driver of economic activity, processes are still incredibly manual, with people printing forms out, circulating them, a lot of human capital sitting in the middle doing processes highly inefficiently that are very repeatable and very easy to digitize and automate.
You've talked a little bit about the scale of private markets already. You gave that a few million figure for the US. Just give us a sense, do you have a sense on an international scale just how large private capital markets are?
Private markets globally are about $10 trillion. And what's really interesting is that over the last decade, private markets have grown at about double the rate of public markets. In most major economies, public markets have seen a decrease in listings, whereas private markets have seen an acceleration.
Let's go back to the inefficiencies you were talking about. What can you automate? What can you digitise in private markets?
Our platform encompasses three core sections. The first is what we call private placement, which is really about the investment into companies or projects, the issuance of new securities, raising of new capital. Second is securities administration, which is the ongoing administration of those share and debt and convertible and fund unit registers, and management of those investors. And then third is secondary liquidity, when those investors eventually want to be able to sell out of their holdings to another investor. And so within all of those three segments, there are a whole host of processes which are very manual. So as an example, private placement, everything from onboarding investors, doing background checks on them, complying with regulations in certain jurisdictions. So let's say a US family office is being invited to a fundraise for a European company. They have to complete what's known as a Reg B form and file that with the SEC. And the European company has to also capture that. The European company is also responsible for ensuring that there's no money laundering here. So the family office is above board. All of that can be entirely digitized, and we've done that. Once they're onboarded, then they sign an NDA to be able to access the data room. Again, e-signatures, everything's digital. Then building the book, so being able to distribute and invite more investors. They can indicate interest in the actual offer. They can negotiate the price. They can set different terms and then confirm final orders, moving through to document execution at the back end if there's any agreements they need to sign, again, e-signatures, and then settlement. And we have dedicated settlement screens for all parties. We are also an authorized custodian, which means we can act as that safe cash collection point on behalf of investors for entities using our platform.
Is there a reason why private capital markets have been opaque for some time? Do you think there's going to be any resistance to this kind of automation and transparency?
This is relatively new. People are only just coming to terms with the thought process that highly skilled people's jobs can be digitized and automated. Talk to any corporate lawyer and they would much rather be advising their client on what type of transaction to do, what sort of securities to raise, what sort of legality points they should really be thinking about in that whole transaction, as opposed to just mindlessly executing documents or circulating documents or chasing people for signatures, etc. So, all of those mundane tasks can be taken away, and that frees them up to do higher value activity.
What does it allow in terms of having everyone connected? Because we talk more and more these days about blockchain, the power of blockchain, of course, and networks and interoperability between clients. Is that something that you guys are feeding into?
Yeah, absolutely. So we've got about 15 white labels now globally and growing. Some examples are the Johannesburg Stock Exchange. They launched their private placements market, and that's entirely on our platform. These are projects which European investors don't often get direct access to. And so what we're doing right now is connecting our white label clients together. And that means that a securities firm in Europe or a private equity manager in the US can now have the option of accessing those deals and distributing it to their own co-investment network or their own investor clients. And so we are growing this white label client network, which ultimately has created already a very unique system by which, rather than a single venue which investors can come to, we've actually created a distributed network of venues, our white label clients, from exchange groups to securities firms to small institutions like private equity companies, which are now being connected together, which is already very global in nature.
Understood. Look, let's just finish off by talking a little bit about the setting that we're in. Beautiful Davos, Switzerland. You mentioned at the beginning, often the setting for the World Economic Forum, global leaders coming together to solve global issues. This year they're meeting under the theme cooperation in a fragmented world. Give us a sense of why you think that's important.
That's absolutely important. There's been a big backlash recently to globalization, unfortunately, in a lot of places. That being said, investors are increasingly, and markets are increasingly more connected. And the more we can connect that, the better for everyone. Let's think about private companies, let's think about public companies even, accessing capital. And every company, every project needs capital to grow, and therefore they need to access investors. Every investor around the world wants to be able to access good projects and good investment opportunities around the world, not just in the local place they are. And so the more that we can come together and cooperate, the more that we can standardize regulation across the world, the more that we can standardize other criteria and other restrictions that investors and companies face when trying to access and invest, then the more capital we can have in cross-border transactions, the more it benefits everyone globally.
It's sold to me, this idea of, greater fluidity, even across the private capital markets. It's certainly something that has needed to happen for some time, given the inefficiencies you've described. Miles Milston, CEO of Globacap, it's fantastic talking to you. Thank you for joining us here in Davos.
Thank you very much.